take away the last couple of weeks, and I think, the whole globe was kind of probably much more positive. But, over the last 4-week period, as we track what our customers trade, not only across Asia, but across our total population, we've seen that our customer base in Asia trading our U.S.-based products has been slightly more bullish, than our U.S.-based counterparts. So we saw one of our biggest upticks in terms of from October to November time period in terms of overall risk exposure. And we've seen them kind of rolling into some more high beta names. And I think you can see that, more recently as we've seen some of the strength in the technology sector. This goes hand in hand with what we see our customers trading and where we see our money flowing, not only here, but also across the total population in the United States.
Do you think that setup will continue into 2022, Chris, rolling into the high beta names, as you said there, given the challenges that are still besieging tech broadly on the regulatory front, and then overvaluation as well?
But look, that's a lot in that sentence there. But I think if you take out the overall fear and unknown in terms of what's going on with this new variant, I think it is lots of positive things going on in the markets. We had an unbelievable Q3 earnings season. We have kind of maybe a little bit of inflationary talk has kind of slowed a little bit. I think we've seen the Fed take away that word transitory. We think there's real inflation here to come. But I think some of that things are really positive going into 22 to actually get the next run in the bull market for the U.S. stock market. If we see a little bit of inflationary pressure, that means that we have a healthier type of economy. We're almost back to where we were at pre-pandemic levels in terms of what the U.S. economy is doing. So if we see a little bit jobs growth, we see some wage inflation, we see things that will support the economy going forward. I think these are all positives, not only for the underlying economy, but also for the stock market going forward. But for me, and it continues to be, I feel like it's like Memorex. When are we going to see COVID-19 in the rearview mirror? Because we saw unbelievable just risk kind of on. Risk off sentiment in terms of we saw the VIX spike up to about 35, last week. Now we're back below 20. So a lot of that risk is kind of not being priced into the market as we're digesting some of the information that we're getting from the Omicron variant. And I think that's what is really going to drive markets, because it has been a hugely sentiment-driven market that's been supported by strong corporate numbers for the last couple of quarters.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.